What is going up, everybody? So in today's episode, we are going to be talking about the PDT rule, or the pattern day trader rule. And if you guys don't know what that is, it's honestly a very, very simple rule, and it's pretty much if your account is under $25,000 that you can only day trade 3 times a week, or three trading days. So Monday through Friday, you only can make 3 day trades where you buy and sell within the trading hours of that certain day. There's a lot of brokers that bypass that. Sure Trader, I believe Trade Zero, and a couple other ones, but Sure Trader is definitely the more popular one that you will find out there. And there's multiple ways to get around the PDT rule. That's one of the ways that I actually used to use. Was I had a broker with Sure Trader, or I had an account with Sure Trader, and that's how I could day trade 5 days a week. The one thing that is kind of hard about these brokers is normally their commissions are a little higher. Sure Trader's $4.95 plus I'm not 100% sure. I want to say like a penny per stock, so that definitely adds up rather than just a straight $4.95 commission. Those pennies, if you have 2,000 shares, that could be an extra, couple bucks. But, in the long run, if you're consistent with your trades, you will definitely work up to an account that you can go with. The Thinkorswim platform is great, but they do use the PDT rule. Most U.S. brokers do use the PDT rule. Sure Trader doesn't, because it's like a international broker, but they do offer the New York Stock Exchange and a ton of stocks and stuff to sell. It kind of sucks because the commissions are high, and but the charts aren't as clean like this. If you guys can see, how you guys can have all of it customized. You can, but you can't. You just always got to be careful with it. So, that's what I always recommend, is start off with a Sure Trader account, and, just to get your feet under you. Once you built it up to something that you can make a weekly income with those 3 trades, then you could switch over to Thinkorswim and start day trading, and then build that up, because once you get over about 15,000, it will definitely pick up a lot faster, so you will be able to make those trades. And if you're trading just on Thinkorswim and you have under that 25,000, just do A quality setups, and you don't have to what was I going to say? You don't have to trade every single day. You can always not do it, because it's better sometimes just to sit out of the market, watch it. That's what I do. I only trade perfect setups, and it definitely helps with the losses, and the wins are a lot better. So, and then let's talk about the different types of accounts here. We might as well. So there's a cash account. Cash account does bypass the PDT rule, but the thing about that is it normally takes about 3 days for your funds to settle, so it doesn't really work. If you have $1,000 account and you put it in Thinkorswim, you make a trade, then 3 days later you have to make another trade, and so you pretty much only can trade 1 or 2 days a week, which isn't good at all. So you always got to be cautious of that. Make sure you're on a margin account, which is you buy. You can do it 3 days a week. I think Thinkorswim, you have to have over $2,000 in your account. I'm not 100% sure on that. It might be more or less, but the last time I remember it was around $2,000. So cash accounts are good if you have $10,000 or $15,000 in there, because then you can only, if each trade's $5,000, you can make a trade and then use that other money for another trade, and then by the time you have another trade the following day, the funds from your first trade will be settled, and then you can use that money, and so on. So you can technically do it, but you have to just have some money in there. So the PDT rule, yes, it does suck, but they do it so you don't lose all your money like that. Because I know with Shirt Trader when I first started out, I was just making trades, just because I could, and it definitely kind of bit me in the butt, because I paid all those commissions, I paid a ton of money on just all a bunch of stuff, So always trade a quality setups, even if you have 5 day five. Even if you bypass the PDT rule, is what I'm saying. So that's it though. So pretty much the PDT rule means you only can day trade three times, three times per week. Uh, yeah, so only three times per week. Each of those trades are day trades, so you buy and sell within the trading hours. And if you have under 25,000, but there are other ways to get around it. Cash accounts one. The other one is the broker you use, like Thinkorswim, Trade Zero, I want to say, and then another one. And then the other thing we talked about was the margin account and how that you can pretty much have money in, and then when the you don't need to wait for your funds to settle for the margin account. You can always use that money if it's a gainer or a loser. So that's it though. I hope you guys enjoyed this video on the PDT rule. That's it though. Remember to always stay happy, stay positive, and comment down below what broker you use. I want to know. Take care, and I hope everybody has a fantastic rest of the weekend, and that's it.